Hello everyone. It has been a very long time since I talked about the fundamentals of Nifty and Bank Nifty. So in today's video, let's look at the fundamentals first as it is very much surprising for me, and then we can discuss our regular pre-market stuff for 31st July 2024. Without delay, let's get started. If I say at present Bank Nifty is at its cheapest value in the last 10 years means, would anyone believe me? I don't think so, but that statement is true. Let me explain how. If required, please pause and have a look. Here the pink curve is the Bank Nifty's earnings per share value, which axis is on the right hand side, and green curve is the Bank Nifty's price action with axis representation on the left hand side. As we see, 3 years ago, Bank Nifty's earnings per share value was roughly 1470 rupees per share. For that, Bank Nifty traded around 35,000 mark, meaning it's the P ratio of 24. That earnings per share in 3 years time period increased to 3,440 rupees, which in turn comes around 135% increase. At the same time, Bank Nifty's price action increased only by 47% to 51,500. Here in terms of P ratio, it was coming around just 15. Basically, earnings increased 135%, but for the same period, the index value increased only by 47%. So clearly, Bank Nifty is fundamentally cheaper compared to 3 years ago. Now let's look at the P ratio graph for the last 10 years. Here, this is very important graph. If required, please pause and please do your own analysis. The green curve with right hand axis is the Bank Nifty's P ratio, and the pink curve with left hand axis is the Bank Nifty's index price action. Between 2014 to 2016, Indian banks were struggling due to all its bad and increased NPA. Despite that, for most part of the time, Bank Nifty traded around 20 P ratio. Between 2016 and 2019, that average 20 P ratio increased to 25 to 30 P ratio. Please ignore the 2020 values since we know it's an unprecedented time. So then in 2021, again Bank Nifty's P ratio was settled around 24 to 25, but after that from 2022 onwards, it was constantly keeps on decreasing from 24 to below 15 now. Here the last time the same below 15 P ratio Bank Nifty had was all the way back in 2014. I know it's trading near the all-time high value and it reached multiple times all-time high value this year, and the quarterly results were not that impressive, but my point is, despite all that, fundamentally on the P ratio term, Bank Nifty is at least 10 years cheaper. Here please note, I'm not saying Bank Nifty P ratio won't go below 15 or 12 etc. It might fall further because the index price action is determined by demand and supply. So I'm not saying that. What I'm saying is, from here onwards, the more Bank Nifty drops, it becomes more valuable. Please think about it. Any stock with a P ratio of 15 and below is super valuable. Hope everyone can follow me. So that's the Bank Nifty. But what about Nifty, which is completely opposite to Bank Nifty? Again, please pause and have a look. This is the Nifty's chart. As we see, for the past 3 years, all the time Nifty was trading in the narrow P ratio band 20 to 24. So unlike Bank Nifty, Nifty's earnings per share and the index price action was correlated and both increased with similar percentage. Just for info, Nifty at present trading at closer to its 24 upper band 23.6. Again, here also, I'm not saying Nifty won't go above 24 P ratio. What I'm saying is, in the last 3 years, Nifty was able to maintain its P ratio band 20 to 24. But unlike that, Bank Nifty from 24, it continuously dropped to below 15. Overall, Nifty is fair valued and Bank Nifty is undervalued. I think that's the reason, because Bank Nifty is historical 10-year undervalue, it's not allowing the Nifty to consolidate. So what's next? If Bank Nifty PE ratio started to increase and reach 17 or 20, then that will make the Nifty to rally towards the PE ratio of 28 to 30. On the other hand, by chance, because of global momentum or due to some Indian inherent banking stock issue, if Bank Nifty's PE ratio dropped to 14 to 12 means, then it will allow the Nifty to consolidate. Why I'm saying all this today? There is a general consensus among the retail traders that Indian market at present is super expensive, etc. under all. But according to Bank Nifty, it's not expensive. So in the short term, in the next 6 months, anything might happen. happen, fair valuation of Bank Nifty might even take the Nifty to above 26,500 easily. Still, at the same time, Bank Nifty might become more and more bearish as well. In that case, Nifty might drop to 20,000. Hence, for December month, both 20,000 and 27,000 is very much possible. Anyway, now coming to regular pre-market stuff. Last night in US at 10 a.m. Eastern Time, US Bureau of Labor Statistics released the number of job openings in US at the end of June data, which comes around 8.2 million job openings against the market expectation of 8 million job openings, which in turn increased the negative momentum. Already at that trading time, US market was little nervous since they were expecting the Microsoft and Amazon's quarterly results. So only Dow Jones closed positive of 0.5%, whereas S&P 500 down 0.5% and Nasdaq decreased 1.31%. In case of VIX, it increased by 6.5% and moved above 17.5 from around 16.5. Hence, clearly, global momentum was not good at the time of US market close. Then after that, Microsoft and Amazon released their quarterly results, which market didn't like at all. In the offline market trading, Microsoft stock price was down above 7% and whereas Amazon was down around 4%. So at present, global momentum dropped heavily, which is not at all good. However, those negativity was not completely transferred to GIFT Nifty since early morning today it closed around 24,911, equating that with our spot market. For now, it's indicating the gap down opening only 40 to 60 points. Then about Indian ADR, Infosys, Wipro and HDFC Bank, those three areas, there was no fresh movement. It just changed in line with the yesterday's Indian market close. Whereas at the same time, ICICI Bank was around 0.5% positive. In comparison, in India, it closed 0.5% negative. Then about the things to look out, Maruti Suzuki, M&M, Coal India, Adani Power, Ambuja Cement, Bank of Baroda and BHEL are some of the major Indian companies' earnings results are scheduled released today. And in terms of macro, first early morning, Japan's industrial production data, Bank of Japan's interest rate decision and China's manufacturing PMI data, those three are scheduled release. Then during the market hours around 12 p.m., France consumer inflation, Germany's unemployment rate and at 2:30 p.m., Europe's consumer inflation data are due. Finally, in the aftermarket hours in the night, very important US Fed interest rate decision and Fed chairman's press conference is scheduled release. At present, the expectation is Fed to pause the US interest rate for the 9th consecutive time. But by chance, if Fed cuts the interest rate means, then that will create a next upward cycle. In addition to that, private non-farm payroll data and crude oil inventories are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened flat and climbed to move closer to its all-time high. However, again there was a selling at higher level and erased most of the intraday gains, then closed at around 24,850. Thus, on the daily chart, Nifty formed a doji candlestick pattern, which in turn indicating the indecisiveness among buyers and sellers. Hence, it seems the psychological level 25,000 is acting as a strong barrier. So, until a decisive move above that value, we can expect more consolidation. Whereas the immediate support is placed at 24,800, followed by 24,660. Then, in case of Bank Nifty, it opened 30 points gap up and increased to near 52,000. However, again like Nifty, it also erased all the gains and closed at around 51,500. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a doji candlestick pattern. Then about options open at rest. For Nifty, lot of new additional call and put options were added at 24,900, 25,000 mark and 25,500 got the maximum call option open at rest. So 25,000 is the immediate resistance to break. Then on the other side, some call option open interest were unwound at 24,800 and that's the maximum put option without significant call option 24,500. Thus 24,800 is the immediate support to look out for and 24,500 is the strong support. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.